Good morning, everyone, and welcome back to Morning Markets from True Potential. Today, we're going to focus in on a number of the challenges that we're seeing in asset markets over recent days, from primarily geopolitics. Firstly, to politics here in the UK. Obviously, we heard that Liz Truss had won the leadership contest for the Conservative Party yesterday, defeating Rishi Sunak 57 to 43% of the party membership. Very little detail really as yet, given that she gets her confirmation with the Queen today. We'll wait until later in the week when we'll have a podcast to discuss the cabinet appointments that have been made, but also as we get more detail of some of those initial policy statements that's likely to be made. So look out for that towards the end of this week. Just then, turning to asset markets yesterday, we had the US market closed for Labour Day, so very little to report from there. Really, the dynamics in the UK and Europe very much about geopolitics and that ongoing challenge that we see being presented to markets from energy costs and primarily gas prices. George touched yesterday on the real challenge that European gas markets were seeing at the open yesterday, rising some 30% initially, as we got confirmation that Nord Stream 1 wasn't going to reopen post the maintenance shutdown. It's important to remember that it wasn't at 100% of capacity anyway. It was typically operating at 20% or thereabouts over the recent period. But we also got confirmation yesterday from Russia, really, that they're not going to think about turning the pipeline back on until Western sanctions are removed in Russia. I think we'd all agree that that looks like a pretty remote possibility at this point in time. So that challenge in terms of gas supply, the impact on electricity markets will continue to be very evident and at the forefront of politicians' minds. Indeed, yesterday we heard a number of European ministers speak about some of the potential proposals that they're thinking about to help address the energy increase for both the consumer and the industrial customer. So as we move through the week, we expect more detail on that. The other story yesterday really revolves around oil and OPEC+. They had a meeting yesterday, and we touched on this a couple of weeks ago, really. Saudi Arabia suggesting that should the oil price weaken too much for their comfort, that they may look to curtail production. And indeed, we heard yesterday that, in a bit of a surprise announcement really, that OPEC Plus would be reducing supply by 100,000 barrels from October. To put that in context, if we think about daily oil demand is around 100 million barrels, it's 0.1%. So it doesn't have any meaningful impact, but I think what it does do is really give you an indication of where they're thinking about their comfort levels on the oil price, and indeed wanting to probably maintain it in that sort of $90 to $100 a barrel range. So we can look for that as we move forward. Just today, further confirmation of the challenges that Germany is facing. Industrial orders there declining for the 6th month in succession. So just ongoing evidence of the challenge that we're seeing for European economies given the energy market backdrop. We'll leave it there. Please do join us again tomorrow. Many thanks.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.